Hello traders, Gary Wagner here. It is approximately 11 a.m. in Honolulu, making it 4 o'clock in New York City, the first day of March on Thursday, 2012, and this is the daily report for gold and silver. According to the street, they are calling yesterday's trading activity in the precious metals market, specifically in gold, a bloodbath. Apparently, the losses that we saw yesterday, the amount that the market went down, resulted in the worst single session loss in 3 years. We've had a modest recovery today. We're going to talk about that. We're still long in the silver, and we're going to also talk about repositioning ourselves on the long side in gold, all here on today's daily report. Current print, we are up modestly. As I said, we've been up between $17 and $25 higher throughout the trading session, $17.15. You can see very, very good support in the gold market. Silver is showing a real good resilience. That's well up above $35 at $35.44, 45, as you can see current prints on the board. Now, the first chart that I want to take a look at today is going to be our daily chart. It is of cash gold. And here's what I'm finding interesting, traders. When we take a look at it, let me go ahead and blow it up here. What you're going to see is this. And that is we have a simple Fibonacci retracement, which starts at the bottom or beginning of this last rally all the way up to the highs being right around, call it 1788 to 1790, right in that area. You see, I'm just a little bit shy of that. When this market sold off on a single day sell-off, it gave back, as you can see, right to the letters, 38% of that recent gain. That's a very, very valid point for a retracement to go. Now, whether we get an ABC, in other words, if in fact we have concluded our large wave 1, that would make our current count look something like this. And that is, let's go right from the top here, and we're going to just look at our intermediate count. We start with our correction, which is an A, a B, and a C. This is our intermediate count. And now we have just concluded wave 1. And in that case, the most likely scenario is that we are currently in wave 2, which is going to be a corrective wave. Now, wave 2 could, or should be, I should say, comprised of an basic A, B, C correction. Now, when we look at an A, B, C correction, typically, if we have in fact completed wave A, B should take us anywhere between 50 and 75% that of the move down that we saw on our A wave. So traders, really all I have done now is I have taken and created a new Fibonacci retracement, and that retracement is simply going from this top to this bottom. In other words, the move that we saw yesterday. And under that assumption, a 50% move takes you to about 1738, and a 75% move, I plotted the 76, but it's approximate, about 1765. So my estimation is that we're probably going to see a nice move up here, anywhere between, call it 1740, 1760 in that area, and then I would look for either a truncated or a flat to take us somewhere back down to conclude this wave 2. Following wave 2, we are in for one more beautiful trade as we go into wave 3 of our intermediate impulse. And again, wave 3 cannot be the smallest of any of the waves, doesn't have to be the largest. In other words, 5 could be larger than 3, or 1 could be larger than 3, but it cannot be the smallest of any of the impulse waves. That's one of the Elliott wave principles or rules. So therefore, when you consider this kind of a move, call it 1520 to 1780, you've got a sizable move. We can expect that type of move again once we see a conclusion of this corrective wave 2. And traders, let's take a look at the silver market. The first thing that I do want to look at is our daily Hankin chart. And of course, realize it's always going to be a lagging indicator, but what is interesting about this is that you can see this trading activity that we've had over the last couple of days. Look at what it's done to the Hankin candles. This extremely long range, of course. And then this is yesterday's activity because it's geared to the midpoint and compares it of the midpoint of the prior day. You can see that it closed right around that area, that huge doji. You get this red candle, but you've got a real resilience in the market. And in fact, we are still long this market from 28.10. Our stop effectively wasn't hit. But when we take a look at the fact that we definitely have a little bit of resistance in this area, and let me see if I can pull in a couple of areas that we've been looking at. But one of the areas that we had kind of earmarked was this. It's simply a horizontal line, and I'm simply matching it off of a historical point and seeing how it wants to react. In this particular case, this line right in here and this line right in here were two areas that I looked at. This being the 50% Fibonacci retracement area, and this horizontal line here is just matching to this low that we got in here. And my sentiment is that we need to have some effective closes above that 50%. And right now, we are above it, 35.48. And we need to be above 35.35. So we're doing well when we look at it in that way. We want to obviously maintain this long position. We'll look at where we want to see our stops go, but so far they've worked well for us, so I just want to keep them where they are for the time being. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow on Friday for another daily update and review, our weekend review. Bye-bye.